All right, so on Wednesday, the Fed increased the Fed funds rate by 0.25%. And as a result, mortgage rates came down later that day. And they've been hovering around a certain range since then. But remember, the Fed does not control long-term mortgage rates. The Fed controls the Fed funds rate, which is the overnight rate that banks lend each other, a short-term rate. And the reason that this is happening, the reason they're increasing the Fed funds rate as of now is because inflation is still hotter than normal and they want to combat that. They want inflation to start coming down on a year-over-year basis, which it is slowly, but then it keeps kind of still lingering a little bit because it's still not dropping like they wanted to. So that's why they've been increasing the Fed funds rate by a little bit. But remember, there's still a lot of uncertainty in the market. There's still a lot of fear, especially with the recent bank failures that have happened over the last couple weeks. Consumers are starting to get spooked a little bit. So even Fed Chair Jerome Powell said in his statement after increasing the Fed funds rate that some of these bank failures have kind of been like a free rate hike because they scare consumers. They make us feel like there's probably some major problems going on in the economy. So we might tighten up a little bit, spend less, which is the same result as what they're doing by increasing the Fed funds rate. They want to slow down the economy. So he did make mention that some of these banking fears that are going on are kind of like a free rate hike, and they're allowing them to kind of look at the data and make sure that the economy doesn't just completely crumble, but they do want to make sure that they're increasing the Fed rates, the Fed funds rate enough to slow down inflation. So the next meeting, the next announcement will be in May, where they will then announce if they're going to increase the Fed funds rate again, maybe keep it where it is, or possibly drop them. But I highly doubt that they will drop them because inflation is still a problem. So remember, mortgage rates and the Fed funds rate are not correlated with each other. Now, the Fed funds rate and what the Federal Reserve make mention of during their meetings does affect long-term rates because that tells the economy, or that tells the consumer kind of what to potentially expect in the future. And as of now, Fed Chair Powell is saying that inflation is still a problem. So we'll continue to review the data and we'll see if we need to continue raising rates or keep them where they are. But remember, there's still a lot of fear, a lot of uncertainty, which means that that's kind of slowing down the economy by itself without needing any Fed rate hikes. So I hope that brings some value to you. I hope that brings some clarification to you. Remember, I do all the shopping for you when it comes to a mortgage to make sure that you get the absolute best rate possible out there in the market. So no matter what the Fed is doing, no matter what the economy is doing, I'll make sure that you're getting the best rate for your specific situation. Hope you have a great rest of your week, and I'll talk to you soon.